Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of ChargePoint, ticker symbol CHPT. And so here I am recording this on Saturday, July 6th, after ChargePoint closed on Friday, July 5th, at a price of $1.83, being up about 10.25% on the day. And so, yeah, I wanted to go over the chart mainly because somebody left a very nice comment saying that they hope that the stock price of ChargePoint continues up next week. And so I had a look at the chart while at work today, thinking, we've seen this big up move. I would expect there to be a pullback following it, but maybe there's some justification for why price could continue higher. And so I looked into a few things, and what I found has got me pretty excited. So I'm just going to kind of go over my thought process and go over why I think ChargePoint could be going up a lot more next week and the week following. But of course, I could be wrong and we could be pulling back. So do brace for that. So looking at the chart here, there are a couple things that I looked at first. One is the options table, and then I also looked at the volume. And so first I'm going to go down the options rabbit hole, and then I'll come back, look at the volume, and just go over the chart and see if the logic behind the options makes sense, matches up with the chart. And so the first thing that I did, it came over to the options table here, looking at calls, and I'm going to be going over the calls that expire on July 12th, so this coming Friday, as well as the following Friday, July 19th, which is monthly contracts, and then the following week, July 26th, these being the last 3 Fridays of July. And so looking at the options table up here for the expirations on July 12th, I was just kind of looking over at the open interest to see if there were any contracts that stood out as having a lot of open interest and if any of them were in the money. And so considering that price is $1.83, the $1.50 strike for this coming Friday is in the money. And that one happens to have a lot of open interest, almost 66,000 positions open. And so, thinking about that and just kind of comparing it with the other contracts around there, the next highest up is the $2 strike, and that has a little over 4,000 contracts. So, this is just a massive number of contracts, and they are all in the money. And so, that got me thinking, maybe ChargePoint is set up for a gamma squeeze with all of these contracts in the money if the price on this coming Friday is above $1.50, which it currently is. There could be a lot of options being exercised that would basically force market makers to buy shares to cover these in the money call options. That could trigger a gamma squeeze. And so, that's got me pretty compelled, but I also kind of wanted to consider what the maximum pain is. So I like to go over to this website, maximum-pain.com. And so if we do look at the max pain for July 12th, this coming Friday, it is $1.50. And so what max pain is, that is effectively the price that the maximum number of options, whether calls or puts, would be expiring worthless, out of the money, and so that causes the maximum amount of pain. And so for this coming Friday, it is $1.50, so that does make me think that there could be a lot of downward pressure on the stock, market makers and bad actors, whatever, people wanting to drive the price to max pain would want to be shorting the stock, bringing price down. So, that is a little bit of a concern. But then I also wanted to consider the upcoming weeks to see what max pain is for them. Maybe it is going higher. And so if I flip over to the following week, so the contracts that expire on July 19th, these are the monthly contracts, the max pain is $2.50. So, that seems pretty good. That seems encouraging. However, since these are monthly contracts, they were likely purchased, months in advance when the stock price was higher. So, you got to take that into account. But then, if we flip over to the following week, the last week of July, closing on Friday, July 26th, Max Pain is again $1.50. So I do think that there is going to be some downside pressure in the coming weeks to be bringing price down to $1.50. But if we flip back over to the options table here, I'm actually going to come back to the options table because I kind of wanted to go over my thought process given these options after we look at the chart. And so basically, my thoughts are there are a lot of contracts that are currently in the money at the strike price that is max pain. And that actually makes sense. I would think maximum pain would be like $1.49, so just below these calls, just below this strike, because then all of these would be expiring worthless. Right now, they are not worthless, so that makes me think that we could be seeing price going a lot higher as these contracts start to be exercised. So, I find that to be really interesting. But then looking back over at the chart, I had mentioned that the second thing that I looked at was volume. And so seeing these big moves here on Wednesday, July 3rd, we saw a 16% move to the upside, followed by on Friday, after the 4th, that we got a more than 10% move to the upside. And so I would expect with these big moves to the upside that they would correspond with large moves in volume to the upside, lots of shares traded, pushing price higher. But actually, if we look at the volume down here, it doesn't really look that exceptional compared to the prior amount of volume that has traded on prior days. And also, it doesn't look like there's a lot of volume traded compared to June 28th, where we saw this big spike in volume, over 53 million shares traded on that day. So, with about 15 million traded on Friday and about 23 million traded on the 3rd, that makes me think, that volume is not backing these moves to the upside, so they're kind of weak. And so I could see a pullback. But then I started to think about this day, June 28th, when we had this massive surge in volume, looking at the, prior, let's see, this goes back to the middle of April, we didn't see any volume traded that high. And so I'm wondering, why was volume so high on June 28th? Did anything crazy happen with the stock price on that day? And actually, if I just remove my drawings for a second, we can see on that day that was actually following, these moves to the upside. So if I just get a measurement up there, that was following, a nearly 18% move to the upside. And then we got this, cross there. I believe that's pretty similar to a dragonfly doji, which is bullish because this big wick that came to the downside was bought up. Lots of volume there holding the stock price up. But, I'm kind of surprised we didn't see a massive surge to the upside. So what is significant about that day? What is significant about that cross and there being so much volume traded on that day? And so I was thinking about June 28th. That's around the end of June. And if I look over to the next trading day, it's July 1st. So not only was this a Friday, that's the, options expiration, this was also the last day of the month. So we got a monthly candle closing, maybe at a significant level, or maybe, trying to push it below a significant level. And so kind of thinking about that, I don't know what the max pain was for June 28th, but I imagine it was right around $1.50. So if there's all of this volume traded on that day, I would think it's significant if price closed above $1.50. And actually, if we look at the close on that day, for the week, for the month, we saw a close at $1.51, so just above $1.50. And so I imagine that max pain was $1.50. There were a lot of contracts, call options, that expired barely in the money. That may have been exercised, or that market makers had to provide those shares to cover those calls in case they were exercised. And so that kind of got me thinking, well, maybe this volume that we saw these past couple days, the drop in that volume, isn't really that significant if I'm comparing it to this day, because it was the last day of the week and month, and we did get a pretty notable close. Makes me think that that volume was pushing price to hold above that level. And also thinking about this lower volume, July 3rd was half a day for trading, and we saw, compared to the other volume that we've seen over the past couple months, the past few months, it's, right along those lines in the upper part, on the upper level of that trading that we've seen. 23 million shares traded, whereas, over here where we saw this, gap up, pretty big move there, 28 million shares traded. So right around that level. And this is only half a trading day. So that makes me feel pretty good about that volume, actually. There was volume backing this move, with half a day. So I feel pretty good about that. And then thinking about Friday, I don't know about you guys, but I've been working this weekend. My schedule is Friday, Saturday, Sunday. And when I had to go into work on Friday, it was like going to a ghost town. Not many people were there. So I'd imagine not much volume, not much action in the market on Friday being traded. And we actually see, a continuation to the upside with, relatively light volume or normal volume. But considering the day, considering the scenario, it seems pretty significant to me. And also looking at that candle, what price do we close at? $1.83. What was the high for the day? It was $1.83. So, this makes me think that it's kind of set up to continue into next week and that we might be breaking higher. Maybe we trigger a gamma squeeze. And also, I should note too that the after hours trading price did come down about 2 cents, which is a little over 1%. And, I always think that after hours and pre-market trading is kind of a way to kind of dupe retail into thinking, oh, the top is in, it's pulling back in the after hours. Maybe I should close my position. I'm up a lot over the course of the week. And, that's very true. It did go up a lot over the course of the week. And really, since the 25th of June, price has gone up a lot. So good to secure some profits for sure. But I think that there are a lot of things in the chart suggesting that price could be going higher. And so just looking at these lines that I've drawn here, I believe I went over this red line in the last video I did on ChargePoint and other EV stocks, did get a bounce from there, did move from there up to this golden pocket here, got rejected but pulled back and bounced off the 786 at a price of $1.39, bouncing from there, breaking above the 50% retracement, which is $1.63.5, and then on Friday, breaking above that level, not getting to the 236, but definitely closing above the 382 at $1.73.5. And so I'm wondering if price will be continuing higher Monday, Tuesday, and through the week. And also did want to point out some levels that might be acting as resistance. I did draw this downtrending yellow line, was not in the previous video. That is based on the high from February 12th, as well as the other pivot point being this high here from May 14th. And so from that, we basically see, we pierced it a little bit, but on June 12th, we did come up to that level, did get rejected from it. And so now, I'm wondering, are we going to get rejected from that level? Are we going to be able to close above the 236 at $1.85.9 or $1.86? Are we going to move up past $2 a share, getting above 206, which was the high from May 14th? And might we be bumping into this purple uptrend, which was the neckline for this head and shoulders pattern that I had previously pointed out, going over this measured move that could be happening, which we saw be carried out and actually exceed that level. And that level actually corresponding pretty nicely with the 786 over here. So I find that to be pretty interesting. But anyways, enough rambling about the chart here. I kind of want to go over the options table and basically my strategy or my thought process on what could be happening, considering that there are so many in the money calls right now. I feel like price is going to be forced to continue higher, and I think that it could be breaking above all of these levels and maybe be getting to $2.50 for the 19th for that max pain, maybe pushing that max pain even higher. And so, just looking at the chart here and thinking about that, thinking about max pain being at $1.50, which does correspond with the 65% retracement. That is, the base of this golden pocket here from the 65 to the 618. And that level does correspond with this consolidation that we saw here. Those wicks to the top could be acting as support. So it's very, very possible that price does pull back to $1.50. So risky in that sense. But if we do continue with the momentum, I think that price could move violently to the upside. And so now I am finally going to switch back over to the options table and just think about some of these contracts. So this one with the open interest, that's nearly 66,000. So the ask price for that to buy one of those contracts is 35 cents. That translates to $35 per contract because it's 100 shares per contract. That doesn't seem too outrageous considering that price is $1.83 right now. One could buy 100 shares at $1.83. It costs $183. Or one could buy a call option at $35. And if it closes in the money on Friday, or if one wants to exercise it, that would then cost an additional $1.50 times 100, $1.50, putting the total at $1.85, not much higher than current price, and that could put some leverage on it for it to squeeze higher with all of these contracts that are still open here. And so I find that contract to be pretty interesting, but if we do get a pullback closing at max pain, closing at $1.49, those would then expire worthless. So I do feel like that's a little bit risky. And so I'm kind of curious about the contracts that expire on the 19th and the 26th. And so if we look at the ones that are for, strike of $1.50, it's only a cent more. It's only $1 more for that contract that gives you an extra week to have the option to exercise it. The open interest is pretty high, almost 9,000 on it. Not as high as the $2.50 contract at about 21,000 contracts open right now. It does kind of make sense. That is the max pain, $2.50. So I could see that. But, it is appealing that, risk $35 for one contract at $1.50, having a week for that to, either expire worthless or just capitalize on any momentum to the upside, swinging it for premium. Or, have an extra week, spend $1 more, and then you'd be paying, if exercised, $186 for 100 shares, combining that ask price with the strike price. But then also just giving one more week of buffer. Wanted to do the same thing with July 26th, looking at the, actually these are behind Ed's head, so I'm just going to scroll that up. And so here, July 26th, we've got the $1.50 strike. Looking over at that, we got almost 1,800 contracts right there. And so, yeah, that's actually the one that has the most amount of open interest for that expiration date, July 26th. So I find that to be appealing. And also, if we look at the ask price for it, it's $41. So, that's an additional $6 relative to the one for July 12th, that's at $35. And so, those all, seem pretty interesting because, they give options of when one could, exercise those calls or, just swing them for premium. But also there's one other thing I did want to point out that's kind of like a, in case I'm wrong. And so my goal with ChargePoint is to pick up more shares. I like the company. I like the stock. I want to get more shares. And so maybe let's say we do get a pullback. Price does close on Friday, July 12th at, let's say, $1.49. So just below that strike price. Then, all of these calls would be worthless, or at least this call would be worthless. And, I'd be out that $35. And so, I'm curious to look at puts because I could sell a cash secured put with a strike of $1.50 if in case price does come down to $1.50 or close below $1.50, I should say. then that call would be worthless, but this cash secured put would not be. And so the way cash secured puts work is I got to have, enough money to buy those shares right now at the strike price, which is $1.50. And then in order to set that cash aside, I'd get paid a premium. Right now it's 2 cents, translates to $2 for 100 shares. So, it's not that exciting, but I do think that's kind of a nice insurance policy. If the $1.50 call expires worthless and I want to pick up shares at $1.50, this kind of secures that for an additional $2. So, I like that. But then, the thing about cash secured puts, then I got to have $150 to then buy those shares. So that's an important thing to note. But yeah, I feel like getting a cash secured put with the strike of $1.50 for July 12th, and considering, these options with the $1.50 strike for the next few weeks, all seem pretty appealing, because looking at the chart, while at first glance, this volume didn't seem that high, it seemed not looking so good. With the close at the high, with this volume being traded on the close of June, getting a close above an important level, $1.50, closing at $1.51, I think that suggested on that date that bulls are in control and that the stock price is likely to go a lot higher. Will it get up to this gap here around 471? Maybe. I don't know. I think it could definitely break above this uptrend. I think it could be getting to these wick highs as well, around 330, 354. So I think it's all possible. I think that could happen in the next couple weeks. But also I think that price could be pulling back to this golden pocket here at $1.50. So good to manage risk with this one. But, I just had to share this because I just think that the chart looks beautiful. And and I'm really compelled by the open interest for the $1.50 call coming up this week. I really like paying attention to options, and that right there, that amount of open interest really stands out to me. It seems pretty unusual, and so I feel like with that, we will likely be seeing those up moves. And so I'm excited about it, but I'm also prepared for if it does dip to $1.50, that's not going to wreck me. But, I am excited to see it break above these levels. I think it's going to happen, but just in case it doesn't, be prepared for the worst. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and thank you for that comment. Really excited about it. Take care.